Bitcoin has been in the news because of its price, which has been fluctuating drastically and making headlines for months. Yet over the past week, the cryptocurrency has climbed to a 9-month high, surpassing $27,000 and heading towards roughly $30,000 per coin. Many people are interested in learning what caused this sudden surge in price, as well as what the future of Bitcoin holds. Using the alias Satoshi Nakamoto, the largest and most well-known cryptocurrency in the world, Bitcoin was created in 2009. There is no control over Bitcoin held by either a government or a financial institution because it operates on a decentralized network. Instead, to verify transactions, a group of users known as miners employs powerful computers to crack complex mathematical challenges. The price of Bitcoin is determined by supply and demand, with the value of each coin altering depending on the amount of purchases and sales taking place at any particular time. The price of Bitcoin has varied wildly from day to day over the years, demonstrating extreme price volatility. One of the factors contributing to Bitcoin's recent growth may be the increasing acceptance of cryptocurrencies by the general population. Major companies like PayPal and Visa have started to accept Bitcoin as payment, while some companies like Tesla have made large investments in the cryptocurrency. Investors' confidence in Bitcoin's long-term viability has strengthened as a result, driving up its price. The ongoing COVID-19 pandemic could possibly be contributing to the recent rise in the price of Bitcoin. As the pandemic continues to harm the global economy, many investors are turning to Bitcoin and other cryptocurrencies as a refuge investment. This is because Bitcoin is immune to market volatility because it is not controlled by any governing body or financial institution. Also, a lot of analysts believe that the May 2020 price halving event is what is to blame for the recent price spike. Around every 4 years, a procedure known as Bitcoin halving reduces the amount of Bitcoin that miners can get as payment for validating transactions by half. There will be fewer Bitcoin accessible as a result, which might increase demand and drive up the price. In May 2020, the number of new Bitcoins entering circulation was cut in half, or by 50%. As a result, there is currently a shortage of Bitcoin, which has recently increased its price. The fact that Bitcoin will become more valuable and uncommon as a result of the halving event is another reason why many investors believe it will increase in value in the long run. Although the price of Bitcoin has lately risen, there are still uncertainties about its long-term viability. Due to its significant price fluctuation, some experts warn that Bitcoin may be too risky for mainstream investors, while others are concerned that it may be used for evil deeds like money laundering and funding terrorism. Yet several governments are starting to take action against Bitcoin and other cryptocurrencies. Other countries, like China, have even made it a criminal offense to use them. This would limit Bitcoin's capacity to gain widespread acceptance and could eventually lower the currency's long-term value. Bitcoin investors and enthusiasts in general undoubtedly find the current price spike intriguing. It's important to keep in mind that Bitcoin's value is still highly unpredictable, and that investing in cryptocurrencies comes with dangers. As usual, investors should do their own research and speak with a professional before investing in any cryptocurrency. The ongoing COVID-19 pandemic increased public acceptance, and the May 2020 halving event are likely to have all played a role in the most recent rise in Bitcoin prices to a 9-month high. However, it's important to remember that investing in cryptocurrencies has risks and that the price of Bitcoin is very erratic. Because of this, investors should always seek professional advice, be prudent, and diversify their holdings before making any investment decisions. It will be interesting to see how Bitcoin's price evolves over the coming months and years, and if it will stay a niche asset or become more widely accepted as an investment choice. despite the fact that the increase in Bitcoin's price is evidence of the growing interest in and acceptance of cryptocurrencies, it is clear that Bitcoin and other digital assets will remain a topic of discussion and debate for some time to come. After the 2008 financial crisis, the U.S. Federal Reserve took unprecedented action to support the country's banking industry. The creation of a $152.9 billion emergency lending fund to help national banks was one such action. This was done in response to the rapidly deteriorating financial situation that threatened the stability of the whole banking system. The emergency lending program was established in order to assist banks that were experiencing problems obtaining the capital they required. Via this tool, the Federal Reserve would accept underwater securities from distressed banks at market value, providing them with the urgently required liquidity. It was important to prevent a wave of bank failures that may have resulted in a catastrophic collapse of the financial system as a whole. The reaction to the choice was a mixture of relief and skepticism. On the one hand, many people believed that it was vital to take this action in order to prevent the worst-case scenario from occurring. But some people thought it was a bailout of the institutions that had caused the crisis in the first place. In the end, the emergency loan facility was seen as a necessary evil, a measure that had to be taken to prevent a total financial meltdown. One of the main reasons the emergency loan facility was created was the prevalence of underwater securities. These assets, which were usually backed by risky subprime mortgages, have seen a considerable drop in value after the collapse of the housing market. As a result, several banks learned that the securities they had acquired were actually worth far less than they had originally thought. This made it difficult for them to raise money and acquire assistance. The emergency lending program, which accepts underwater securities from insolvent banks at market value, was created to address this issue. In order to meet their funding needs, the Federal Reserve provided these banks with access to a source of liquidity. A series of bank collapses that might have taken down the entire financial system were thought to have been prevented by taking this crucial move. The emergency lending facility provided money to failing banks while also aiding in the restoration of public confidence in the banking industry. By providing a safety net for banks, the Federal Reserve showed investors that the government was committed to preventing a financial disaster. This led to a stabilization of the markets and a reduction in the worries that had caused a wave of panic selling. Despite its success, the institution that provided emergency loans had its critics. Some claimed that the Federal Reserve had overstepped its bounds by saving institutions that had engaged in risky behavior. Others said that the government was only delaying the inevitable, and that the facility had only delayed what would eventually happen, that the banks would eventually fail. Notwithstanding these criticisms, the emergency credit facility is widely seen as an essential step in preventing a total financial catastrophe. By acting as a safety net for troubled institutions, the Federal Reserve helped to stabilize the financial system and prevent a wave of bank failures. In turn, this helped to prevent a larger economic disaster and allowed the country to begin the slow path of recovery. In the years following the financial crisis, there has been a lot of discussion about the role of government in the economy. While some believe that the government should play a more active role in financial sector regulation, others believe that the free market should be allowed to function on its own. The availability of the emergency lending facility is a stark reminder of how important it is for the government to act when a crisis arises. It is true that the emergency lending facility was a necessary but limited solution. Without it, the financial crisis could have gotten out of control and led to a much more severe economic catastrophe. By acting as a safety net for troubled institutions, the Federal Reserve helped to stabilize the financial system and prevent a wave of bank failures. After the 2008 financial crisis, the U.S. Federal Reserve took unprecedented action to support the country's banking industry. The creation of a $152.9 billion emergency lending fund to help national banks was one such action. This was done in response to the rapidly deteriorating financial situation that threatened the stability of the whole banking system. The U.S. Federal Reserve's emergency lending facility was a key action during the 2008 financial crisis to prevent a total financial collapse. Although, while it wasn't without its critics, the banking system was stabilized, investor confidence was restored, and a wave of bank bankruptcies were avoided. Future generations will learn a valuable lesson from the facility about the value of government assistance during emergencies. It is crucial to remain vigilant and take action in order to prevent calamities of this nature from occurring again. By taking lessons from our previous mistakes, we can only build a more robust and secure financial system that can withstand the challenges of the future.